please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Let's get a sense of what the charts are telling us and a few trading ideas. Ashwani Gujral joins us on the show now. Ashwani, not too much by way of a recovery, though the Midcap index has seen, at least not at the index level, though the Midcap index has seen a recovery from the lows, so now just down close to about 0.25%. Your thoughts, are we entering a pullback phase, at least in the second half of the trading session for us?
See, I would think if rupee appreciates further, it went down as low as 72.45, then chances are good that even the Bank Nifty starts to participate, and in fact we have long positions now on Bank Nifty. This is a very good development that despite bad news, the market is not showing follow through on the downside beyond a point. So that will mean that again we have anticipation of more measures, and it's likely that the Nifty, Bank Nifty, etc. go towards Friday's high. So right now, you should be out of your shorts and should be long. My sense is if rupee does recover further, you could have 100, 150 points pull back on the Bank Nifty from here, maybe 50, 60 points on the Nifty, and you start to form some kind of a consolidation range because at lower levels, both rupee and Nifty, Bank Nifty, etc. are finding support. So now next couple of hours you should see short covering. Having said that, Arvind is a buy with a stop of 389, target of 403. PNB is a buy with a stop of 80, target of 86. And Indian Oil is a buy with a stop of 153, target of 166.
Okay, all right. Thanks so much for that, Ashwani. The Ashwani's call is go ahead and buy the Nifty as well as the Nifty Bank. You could get a good bounce from here. But let's shift focus then to the IPO market. The IPO for IRCON International opens today with a price band between 470 to around 475 per share. Mr. Sunil Kumar Chaudhary, the chairman and MD of IRCON International, joins us now. Hi, Mr. Chaudhary. Thanks so much, sir, for joining in today. Now, the concern is that railway projects, they comprise nearly around what, 85-86% of your total revenues, and 75% of the orders are from the government on a nomination basis. That overhang, in fact, is due to the concentration risk. Your comment on that?
Yes, we have projects of 84-85% in the railway sector. But when we talk of railway sector, it is not only in Indian Railways. Railway sector, we define all the projects which we are executing in Algeria, South Africa, in Bangladesh, in Nepal. They also come in railway sector. The project which we do for metros, which are the ballastless track, electrification, substations. So the complete sector we define as a railway sector. So nomination part, if you say, yes, we have nomination part from Indian Railways, but that part is around 65% only.
Well, Mr. Chaudhary, are you doing anything to diversify then? What will the railways contribute going forward?
See, definitely we are, as I said, that we are executing other projects also, and large value projects and big projects, like in bridges. We have completed 4.5 kilometer long bridges, Railcom Road Bridge and over River Ganga in Patna. We have completed another project, and now another project which we are starting is around 10 kilometer long bridge in Bihar, and around 31 kilometer long elevated corridor for railway line only, that will be in Madhya Pradesh. So we are in bridges, we are in road over bridges, we are in substations, we are in the city distribution electric lines, we are in highways. We are one of the company who is doing highway projects also in toll and hybrid annuity model. So we are in all mix of infrastructure projects. So anytime, anywhere, wherever the outlay is more and where the other side the outlay is less, so we are easy for us to execute any kind of project.
Okay. Your consolidated operating revenues have grown strongly, close to about a 30% CAGR to 4,000 crores from FY16 to FY18. But sir, if I look at your adjusted profits, that has seen a growth of only 2.5% to 411 crore. Why is the profit run rate slower compared to revenues? And going ahead, what should we expect?
See, the order book which I said 22,400 crore is an executable order book. This is the order book where our projects have already commenced and the construction is going on. There are the few other orders where we have taken clearances, done the land acquisition, have taken the clearances from NGT, forest clearances, and the drawing board period is over. So these projects will also come in the execution. So our top line from domestic projects will definitely increase. As far as bottom line is concerned, this will also go up because when the rate of execution it will increase, so bottom line will also increase. In the last year, despite of paying the arrears of pay commission, we have grown our bottom line. And as we are negotiating for foreign projects, which we hope that will materialize within 6 to 8 months, one of the very big project outside India. So our top line will again increase up above than what we have projected, that is 20-24%, and it may be around 30 to 35%, and bottom line will also increase to the EBITDA level of around 20 to 24%.
Well, Mr. Chaudhary, there are a couple of sticky issues, like there are some visual issues that have been raised by statutory auditors. There are also a few pending legal proceedings against the company. Since you're coming to raise money from the markets, wanted your comments on the same.
There was a small, very minor issue which was there for when you do in a foreign country, so RBI permits you for appointment of some agents in the foreign country who help you in knowing the country, knowing the government, and getting you and helping you in your project execution and getting your money paid in the time. So this is the established practice which is going on from last 42 years, and all the public sector undertakings who do project exports or any kind of this, they are in this business. The auditor misunderstood this, but CAG has already given a clean clearance on this issue, so there is no issue at all, and we are not finding any difficulty in this now.
Okay, you are currently net debt free, your working capital requirements are low, you've got a healthy cash balance of 1,500 crores plus. Given all this, what would your dividend distribution policy be?
See, as I said, that IRCON is a continuous dividend paying company. In last, up till date, we have paid 1,500 crore of dividends. And dividend payout ratio is quite good. And we are in the around 50% of our PAT, roughly approximately, we pay as a dividend. And we feel that this policy will continue and we'll be paying dividend to the shareholders to that ratio.
Okay, all right. Thanks so much, Mr. Chaudhary, for joining in and giving us those details. All the best, and we'll talk to you on the listing day as well. I think our ticker team just alerted us actually that the Shanghai market has just closed down. In fact, it's closed at its lowest levels we've seen all the way in the last 4 years, I think. So if I got that alert right, it ended down close to around 1%, I think, in today's trading session. Remember, for this year, the Shanghai market is down 20%. And keep in mind, the currency as well as depreciated. So FIs, they won't be happy at all, because if you're looking at it, the currency depreciation is nearly around 8 to around 10%. Added to that, the market is down 20%. So all that talk about money moving towards the A-list shares in China, that's gone out of the window. That's not made FIs any kind of money. And India could be one of the beneficiaries, and that's why we've seen at least some flows stay with us. But let's tell you, in terms of the market, how do you trade it from here? We just heard Ashwani. We have Kiran Chadav as well, who joins in. Hi, Kiran. Thanks so much for joining in. Your trade on the index, that's the Nifty. And what about some trading picks you have for us?
See, index, we believe that, first of all, very good afternoon. Index, we believe that we would slip further down. The traction is on the lower side. However, we have got stock-specific opportunities that can be tapped. For now, for the index, for the Nifty in particular, we have a strong resistance at 11,430 to 11,440. Till the time the Nifty trades below this, we believe that it's a sell on rise kind of market where a strong support does exist at around today's low. So we'll keep trading between these 20-30 points. And if the low is taken off, then we could slip further down to around 11,300 odd levels. So the bias is of course negative for sure. For the bank nifty, we believe bank nifty is pretty relatively more weaker. 26,900 would be my stop loss for all shorts that would be created, and if today's low, that is 26,750, is taken off, we believe that 26,600 could be a potential target by tomorrow.
Okay, Kiran, and your picks?
I have both buy calls. MCX is one stock that one should look at. A strong positive divergence is seen on the charts with very strong volumes. We believe that MCX should be bought at current levels. Stop loss would be around 812. 812 on the cash price, and we have a target of around 830, which should be achieved by today or tomorrow. The second would be PVR. That's also a buy call. It has already been very strong in today's trades, very strong volumes, open interest additions to a extent of 16%, which is pretty good. And we believe that we are here to cut the resistance, which is at around 1420 in the cash market. 1390 would be my stop loss for any long positions to be taken right now. 1450 would be my target.
Okay. Thank you very much for that. Let's get the European rates up for you on your screen. Expected to be mildly lower. The focus of all global markets is on, the possibility of an escalation of trade war between US and China with Trump over the weekend.
It's higher in today's trading session. This on the back of the cabinet approving a 25% hike in ethanol prices. To discuss this and more, we have Mr. Rajinder Mittal, the MD of the company, who joins us on the phone line. Hi, Mr. Mittal. Thanks so much, sir, for joining in. Give us a few details. These measures that have been announced a couple of days ago, it's expected to have a positive impact on your company, right? So how much of your total revenues gets impacted by this price spike in ethanol? And if you could tell us, now with this price increase, what would be the positive impact? Go ahead, sir.
You see, that at present, we are producing about 6.64 liters of ENA per annum. We propose to convert half of our capacity for the manufacturing of ethanol. The price realization of ENA at present is 40 rupees per liter. And with this increase, we hope to get an additional revenue of 12 rupees per liter. That will be somewhere about 40 crores plus. So we hope to gain substantially, and by year 2021, we should be able to generate almost double the profits as compared to the present one.
Okay, so your incremental revenue is 40 crore, but you will realize the entire 40 crore only in 2021.
No, yes. We propose, because the bidding process has just now started, and the supplies will commence from December the 1st of this year, and this bidding is up to 30th November. So the major impact will be in the financial FY 19-20.
Okay, how much of your total revenues gets impacted, sir? I didn't get that point. How much of your total revenues?
At present, we have got the capacity to produce 6.6 crore liters of...
Right, no, sir, in revenue terms. Last year, for example, you did around 850 crores. So with this price increase, how much of your revenues will get impacted? 50%, 40%, or entire 100%?
This 857 is including the all segments.
True.
We have got three segments. This is the real estate, and the distillery part, and the vegetable oil.
True.
Out of that, 34% is on account of the distillation.
Okay.
So there will be 34% revenue will be impacted by about 25%. There will be 25%. Increase of the revenue, that's about 100 crores.
Okay.
About 75 crores.
Okay. Mr. Mittal, will the company have to make any investments to produce this ethanol from ENA?
Marginally, about 4 crores investment is just required, just putting up a balancing equipment for the separate storage, etc.
4 crores you're going to...
and the process is the same.
So you're saying 4 crores you'll put in, and the additional revenues could be the tune of around 40 crores.
Yes.
Okay, so it's clearly a positive for you, sir. You've given us some brief numbers. Very quickly, if you could tell us other business aspects. You have increased some stake, I think, in the company. Did you buy shares in the open market, or were there some outstanding warrants? And is there a debt reduction plan, sir? Because your market cap is 200 crores.
Definitely. We have got a debt reduction plan. The real estate inventory, which is totally debt-free. Now, realization has started from that, and this year we hope to realize about more than 25 crores to 30 crores on account of this, and that will be going towards the entire debt retirement.
So debt will be down by 10% this year, is what you're trying to tell us?
Yes, 10 to 15%.
So currently your debt in your books is around 220 crores. It'll come down to around 190 crores.
Yes.
And you're looking to increase your stake further. You've increased your stake a bit in the last couple of quarters.
We have got this proposal to further take this warrants in the issue warrants in the April 2019.
Sure. Okay, Mr. Mittal. Liquidity crunch at ILNFS has led to a series of downgrades by ICRA on its outstanding debt papers, as well as in a host of group company. Nomura says the group has 90,000 plus crore of system borrowing. Now, a bulk of that is in the banking system. Some of it also lies with debt funds. Sumera has a scheme-wise breakdown of this. Sumera?
Well, thanks very much for that. So between about 9 mutual fund houses, the total exposure to the ILNFS group stands at roughly about 3,500 crores. So a Kotak report shows that the biggest exposure lies with Aditya Birla Sun Life AMC across 7 of their funds and various fixed-term plans as well. Now, an important point to be made is that every single one of these schemes listed here has at least some amount of exposure to the Jharkhand Road Projects implementation company, which yields an annuity income from the state government, and therefore that is not a risk. So the exact quantum of this exposure is unknown, but clearly the exposure at risk now for ABSL is likely to be much lower than the 1,500 crores that we're showing here. The DSP group likewise has a collective exposure of about 600 odd crores here as well. They have 2 of their funds, which have the asterisks over here, have exposure to the Jharkhand Road Project, and therefore to that extent, the exposure is not at risk. Next, Tata Mutual Fund has about 250 odd crores invested in the ILNFS group companies across 3 schemes, but as a percentage of net assets, it stands at under 5% in each of those schemes. Invesco then has an exposure of about 28 odd crores across 2 schemes, and in each, the risk doesn't seem overtly significant. Principal MF exposed to the extent of about 73 odd crores spread across 4 schemes, of which only 1 has exposure that's higher than 5% of its net assets. Besides this, there are various individual schemes which have quite high exposures. So LIC Liquid Fund is the largest at about 750 odd crores. That's a single scheme. BOI AXA's Credit Risk Fund, various FMPs, fixed maturity plans by Kotak, and also the Motilal Oswal Ultra Short Term Fund. So these remain some of the single funds or schemes with the largest exposures. Back to you guys.
Time now to talk about commodities and currency. Manisha Gupta joins in as always. Manisha, we thought there'd be a bit of a respite in Brent crude prices, but it's inched higher again as we speak.
Oh, absolutely. Yes. $78 seems to be like a level that the crude prices are meandering around. The important thing is that we haven't been able to hold above $80 per barrel, even as Brent has seen that level come back for a couple of times in last 1 month itself. Well, the reason that you are looking at a bit of a pressure is that the global supplies have seen an increase in the previous week. There also is a couple of rig count increase in US. It is the US-China trade war concerns which are also keeping a bit of a pressure on the demand estimates going forward. But on the other side, you also are looking at the refinery maintenance and demand to pick up on a seasonal basis as the winter approaches. And the Iran sanctions is going to be one major subject. 4th November is the deadline for that. And the markets also are looking at stronger demand estimates, especially being put out on from IEA, Russia and the OPEC countries as well. So it's quite a bit of a contradicting fundamental that we are seeing in for crude oil prices. So your range pretty much continues to be between $77 to $80 per barrel for the Brent prices.
Okay, thank you very much for that. Some important statements coming in from the CBDT chairman. Let's get some more color on that. They've received a tax amount of 7,500 crore from the Walmart Flipkart deal. They also go on to say that they hope to exceed the 11.5 lakh crore rupees direct tax target set for FY19. Sapna Das joins in with the details. Sapna?
Well, so these are questions that are doing the rounds everywhere in terms of the fact that how the balancing is going to happen in terms of indirect and direct taxes, with the GST revenue showing a certain trend. And last year also, direct tax had played a very important role in, helping the government stay at least 3.5% deficit target. So the sense that we are getting is that probably this year again, 11.50 lakh crore that has been set for direct taxes, well, there could be an effort to kind of try and exceed that. But in terms of the numbers, the sense that we have gathered very clearly is that the response has been extremely high in the first 6 odd months of the financial year. So we are given to understand that close to 1 lakh crore or rather around 95,000 crores of refunds, the government has planned to basically front load these. So they have already given out these refunds. So on that expectation, now going forward, whatever collections do come in, they are expecting that buoyancy to remain, because the gross numbers may be very good, but once you give out big refunds, the net becomes an issue at times. So that's the first hope. So that's the first one thing to watch out for. The second, of course, in terms of your, Q2 advance tax numbers, there have been indications that they have been buoyant. They are given to understand that basically, for a full financial year, 4 lakh crores is generally the advance tax number to look at, keeping all the 4 quarters in mind. So historically, he has given an indication that around 45% of the target should at least be met. So that comes to roughly around 1.8 lakh crores, and this is on the conservative side. 15% in Q1 and around 30% in Q2. Putting that together, so at least half of that number, if they are able to achieve by September, that's a very good sign. That shows basically that there is buoyancy in revenues. The only worry here could be refunds down the line, but the indications that he has given, the chairperson himself, is that, most of it has already been front-loaded. So going forward, they are not expecting too much of a trouble on that front. This is what the take is as of now. It's a dynamic situation. You have to keep a watch on how the numbers pan out in the coming months.
So at least the revenue side of the fiscal deficit equation remains intact. Thanks, Sapna, for that. With that, it's a wrap on Halftime Report.